So, good morning, everyone. So, we'll start with the news that we have, and let's see how it would impact today's stock market sessions. So, before that, we'll just start with the technicals for today's index. So, we had marked zones for yesterday. So, price exactly reacted to our demand zone, and it had a massive gap up today. So the price again reacted to the zone which we had a demand zone here again. So the price reacted to the demand zone and it is again retesting the supply zone. So have eye on these two zones. So whichever zone breaks out, we need to look for that direction. So if we switch it to 15 minutes time frame, we can see that there was a zone here. So I had also marked this zone because it's a 1 hour time frame. So yeah, so we can see a zone right here. So these were the zones that I have marked, and if we see there is a supply, the indicator is also given a supply zone here. You could see the zone right here. So this would be the plan for today. Wait for either breakout of the zones. Don't just blindly enter in any of the zones because we don't know how the price is going to react. Since today is Sensex expiry, we'll just touch upon it too as well. So if we look at the Sensex technical chart, we have same the zone is right here. So wait for the breakout either of two zones. So we don't have a zone here. We can't consider this as a zone level because we didn't have a proper structure shift over here. So we need to see that will the zone touch this and give us a retest or a bullish structures, bullish candlestick patterns so that we can look for long positions. Since today is expiry, don't chase out of the money call options because the option premium might decay. So this will be today's technicals. And if we look at Bank Nifty, we don't have any of these zones complementing it. So we could take this pivot level as a important point for the price to come here and retest. So and we also have a resistance level over here. So we need to wait for the break of either of these zones because we don't have anything for the price to react here. So don't blindly enter without a confirmation. So just wait for a break of either of the zones so that we'll have a clear picture where the price might go. If we will just switch into 1 hour time frame. Yeah, if we switch into 1 hour time frame, we have a demand zone here. Sorry, supply zone here. So we'll see how the price is going to react in that zone. So this would be the technicals for today's zone, and we'll just talk about today's news and how it would impact today's stock market sessions. So the Indian equity benchmarks, NSE Nifty 50 and BSE Sensex have kicked off the session on a cautiously optimistic and a positive note. So carrying forward the explosive moment which we witnessed on Wednesday, the Nifty 50 has managed to sustain its foothold right above the crucial 24,000 psychological mark. We'll just spot this in the chart. So when we analyzed open interest, we told 24,000 had a strong resistance level. So price exactly tapped into that level and gave us a massive gap opening. So the positive opening tick was heavily signaled by Nifty futures earlier this morning. So which traded up by over 70 points to scale the 24,120 mark. So this builds cleanly on yesterday's dramatic short covering rally where Nifty surged nearly 197 points to settle at 24,021. So and the Sensex rocketed 790 points to finish at 76,999. So the primary structural question for this early morning buying is a sharp contraction in the India Mixed Volatility Index, which has cooled down from 13.94 to 13.33, signaling that near-term fear in the market is evaporating and gives bulls a stable foundation to build a risk appetite. So when we look at the global macro triggers and micron ripple and easing crude, the primary catalyst driving the broader gap up across Asian markets and rubbing off on Dalal Streets is the overnight technological relief rally uh, out of the US future market. So, global semiconductor powerhouse Micron Technology reported stellar third quarter earnings and issued an exceptionally robust revenue guidance for the current quarter. So, while Wall Street's regular hours ended slightly mixed due to ongoing tech sector rotation, so Micron's after hours numbers triggered a massive wave of optimistic across global tech ecosystems. Consequently, Asian peers are trading heavily in the green. So, Japan's Nikkei 2025 jumped over 3.3% and South Korea Kospi surged a massive 4.8% early in this morning. So equally beneficial for India as a massive net importer of energy is the structural capitulation of international crude oil prices. So Brent crude futures have extended their weekly decline, plunging over 8% in the span of just 7 days to trade near $72.68 per barrel. So this unwinds almost all the geopolitical risk premiums injected by recent Middle Eastern tension. So tanker and vessel traffic through the critical Strait of Hormuz has steadily cleared up, ensuring a smooth global supply flow. So for Indian macros, sub $73 crude acts as a direct deflationary force, structurally boosting the margins of downstream oil marketing companies, paints, and specialty chemicals while easing fiscal deficit. So let's also understand today's domestic policy of FII versus DII institutional flows. So on the domestic front, investor sentiment remains buoyant following crucial commentary from the Reserve Bank of India. So the central bank governor recently dropped strong signals that further interest rate hikes are highly unlikely at this stage of the macro cycle, giving rate sensitive sectors like banking, auto, and real estate a major sign of relief. So furthermore, the RBI actively injected 1,41,171 crore in transient liquidity into the banking system on Wednesday. So which immediately lubricated banking stocks and powered a short covering bounce in the bank Nifty index. So from an institutional flow perspective, we continue to witness a fascinating tug of war between foreign and domestic money. So on Wednesday, foreign institutional investors remained net sellers, pulling out 1,843.40 crore from cash equities, extending their massive year to date net outflow tally. So which currently stands at 2,79,253 crore. So however, domestic institutional investors completely absorbed this selling pressure, net buying a massive 3,637 crore worth of shares. So this consistent local liquidity is essentially acting as the institutional floor of market, preventing deeper correction. So we'll just touch upon today's intraday volatility, and since this is today is a Sensex weekly expiry, we'll just touch upon it. So traders needs to brace themselves for highly targeted volatility later this afternoon due to Sensex weekly option expiry, which takes place today. So derivatives data shows that the option chain has a massive concentration of open interest built up at 77,000 strike price. Will have a detailed open interest analysis later after 10:30. So we'll just identify which are the max pain zone. So because the Sensex closed at 76,991, just 9 points shy of this level, expect intense cross index volatility, particularly between 2 to 350. So option sellers will fiercely defend their position around 77,000 if the index breaks significantly above 77,150 or falls below 850, it could trigger a rapid cascading short covering or long unwinding spikes. So for the Nifty 50, analysts have marked 23,900 as the ultimate line in the sand, whereas 24,150 act as a immediate structural resistance. So any dip towards 23,950 during the expiry volatility window is being viewed by institutional desk as tactical buying opportunity rather than a trend reversal. So let's also look at the stocks and sectors in the news today. So several high-profile corporate actions we have got, and order wins and contract baggings are dictating a specific stock movement this morning. So the first stock to look at is Bharat Dynamics. We'll just So this is the first stock to do. So the stock is focused after securing massive back-to-back orders worth 1,347.71 crore from Hindustan Aeronautical Limited for the supply of Helena launches and light replaceable units alongside CMTS LRU worth 238.34 crore. So the pharma major is witnessing strong trading volume after its partner. Duo Pharma Biotech secured multiple long-term contracts from Malaysia Ministry of Health, and Biotech secured multiple long-term contracts from Malaysia's Ministry of Health. So Biocon will supply human insulin under a 3-year deal worth 155.27 million alongside multi-year contract for insulin Glargine and insulin as part. So HCL Technologies and IT Pack. So looking at we just put the HCL stock in this. So building on yesterday's 2% sector rally, HCL Tech is focused as it expanded its strategic partnership with Nokia to co-develop cutting-edge radio access network automations are apps. So alongside a separate AI-led transformation deal with Neste. So So the next one would be Man Infra Construction. So shares are buoyant after the company received the intimation of approval for its ultra luxury Trado 2.0 redevelopment project in South Mumbai. So the project features an estimated gross development value exceeding 2,000 crores and is slated for a future year 27 launch. So the primary market IPO action, we'll just look at which IPO market is buzzing today. So Crazy Snacks opens its 31.47 crore book build public issue today. So meanwhile, CSM Technology has IPO of 1,045.78 crore, and Danver Hybrid Seeds has IPO price of 27.53 crores, and Priyanka Geocomics of 94.51 crore have all entered the second day of public bidding. So these are the news related to the stocks and sectors in the news today. So we'll just move on to the granular technical structure, the moving average convergence. We'll just touch upon the technicals. So a deeper look at the Nifty 50's daily candlestick chart reveals that yesterday's solid bullish a candle with little to no shadow, showing bias controlled sessions from open to close was not just a random buy. It was a precise technical bounce off a key short-term exponential moving averages. So the Nifty successfully defended its 20-day EMA, which is positioned at 23,783, and its 50-day EMA by clambering back and closing above the 24,000 and short-term trend, as effectively flipped from salon rallies to buy-on dips. So, however, technical analysts pointed out that the medium term downward sloping channel isn't entirely broken. The 100-day EMA sits obviously at 24,141 and 200-day EMA rests at 24,444. So, yeah. So this means that while the immediate 9:30 a.m. bias is intensely bullish, Nifty will face a severe structure supply and profit booking the moment it gets close to 24,100 and 24,150 pocket. So we can see we have also aligned our supply zone level from 24,150 to 24,200. So this is a major supply zone here. So have a careful keep eye on this level. Don't just buy a call option once you get a. Just look for the candlestick patterns and wait for this proper structure supply zone break. So, if we look at the bank Nifty, we'll also just see the Nifty's relative strength index, which has ticked up to 51.91, perfectly balanced right above the neutral 50 midpoint, indicating the market is either overbought nor oversold, leaving plenty of room for multi-hour directional extension. So we'll just look at the Bank Nifty as well. So Bank Nifty has a private heavies with a PSU stability. So the real engine behind this market turnaround is the banking sector. The Nifty Bank Index drastically outperformed the market broader on Wednesday, closing at 58,150.35 with a staggering gain of 1.68%. So the entire move is a classic case of sectoral rotation. Uh, So this morning, the script has completely flipped. Capital is aggressively flowing back into beaten down private banking heavyweights, specifically HDFC Bank and ICICI Bank. And there's a clean state of new weekly option series which has allowed bulls to build fresh long positions. So establishing a rock solid intraday support flow between 57,300 to 57,500. So on the upside, we could see a So on the upside, unless those private banking heavyweights give up their morning gains, Bank Nifty is structurally paved to test the 58,959 900 psychological resistance band later today. Conversely, PSU banks are showing mild relative underperformance, trading flatly as capital prioritize the liquid private large cap to drive the index higher. So just you look at the sectoral playbook, IT recovery and media undercurrent. So beyond financials, the thematic star of the morning is Nifty IT Index. So which is holding on to its impressive 2.05 gains from the previous session. The recovery in the IT pack is highly linear. Infosys and TCS are seeing a steady delivery based buying on institutional desk. As we see, as we see 2.5% gain from the previous session. So we also talked about HCL Technologies, which is leading from the front. So it's capitalizing heavily on its new expanded automation partnerships. Tech analysts state that as long as the Nifty ID index can sustain its spot above the 27,400 structural pivot. So the IT sector will continue to act as a secondary engine to support the Nifty if banking stalls. So simultaneously, a quite speculative undercurrent is brewing. there's a closely marginal positive at 1519.30. Media sector is exhibiting a cautiously positive chart. However, because media stocks are highly sensitive to broader market liquidity, the upcoming afternoon Sensex expiry could trigger wild stock hunting in this smaller cap names. So, technical desk are warning retail traders to manage risk tightly around the 1049 support level. So we'll just look at the geopolitical de-escalation and currency dynamics. So adding massive fundamental fuel to the domestic equity, fire are major updates regarding the Iran-United States diplomatic channel. Yeah, so looking at the geopolitical and currency dynamics, adding massive fundamental fuel to the domestic equity fire are major updates regarding the Iran United States diplomatic channel. So behind the scenes, Swiss mediated negotiations have reportedly progressed far better than global intelligence just anticipated. So this sudden breakthrough is the primary reason why global commodities and crude oil, in particular, have experienced a massive structural unwinding of risk premium. So the immediate beneficiary of this geopolitical cooling in the Indian rupee, the USD INR spot currency pair has stabilized near 83.45, recovering gracefully from its recent weak patches. So a strengthening rupee indicates strengthening rupee instantly makes Indian equities more attractive to foreign portfolio investors. So on a dollar denominated return basis also, so if the rupee continues to appreciate towards the 83.30 mark over the next few sessions, it will likely force foreign institutional investors to completely stop their aggressive selling streak and aggressively rejoin the domestic institution in a synchronized buying party. So we'll also look at the mid cap small cap market breadth analysis. So while the Nifty and Sensex are hogging the headlines with large cap fireworks, the broader market health measured by the advanced decline ratio in the mid and small cap segments presents a highly constructive pictures during the initial pre-open. So, so during the initial pre-open and early morning trade, advances heavily outnumbered declines to outnumber by 40 to 6 ratio among the key index constitutions. So this tells us that the rally is highly participate and broad based rather than being artificially propped up by just one or two heavyweight like Reliance or HDFC Bank alone. So high beta sectors including defense, railways, and power infrastructure are experiencing renewed momentum as retail and high net worth individuals regain confidence following cooling and volatility index. So, however, institutional advisors are strictly warning against chasing vertical gap up this morning because market just pulled off a massive 800-point recovery on the Sensex yesterday. So, an intraday mean reversion tip to test early morning support is highly probable before the final European market reopen. So, the golden rule for today's session is to not chase the opening green candle, wait for the structural pullback to the entry zones. So, this would be today's news is related to Indian stock market and how the stock market would perform in today's session. So keep an eye on the technical levels that we had discussed today morning regarding Nifty, Sensex, and Bank Nifty. So I'll be just touching up on commodity markets within 5 minutes. Until then, let me know if you have any doubts related to morning sessions, and let me know your whether on which index are you concentrating today, and what's your view on it. Let me know in the comment section. So until then, let me know your plan, today's view on index, what you are looking to, what's your position on each index, Nifty, Sensex, and Bank Nifty. Put it in the comments, so even we'll share our views related to it. So we'll be back in 5 minutes regarding commodity updates. So we'll just dive into commodity markets. So the broader commodity basket is witnessing a multi-layer realignment. So energy and precious metals are sharply unwinding the recent global premiums, while base industry metals are locking in technical support on the back of improving global tech data. So the global energy complex is undergoing a massive structural correction. Brent crude futures have extended their aggressive multi-day slide, crashing an additional 2% in this morning to hover tightly around 72.40 barrel. So a sharp level not seen since late February. So its American counterpart, West Texas Intermediate, has tracking wise fallen beneath the key support. So which is around 69.98 per barrel. So if you look at the structural drivers, the Hormuz resolution, this massive downward shift is entirely driven by cooling of geopolitical flash midpoint in the Middle East, shipping the commercial vessels traffic through the critical Strait of Hormuz, which has rapidly normalized following a robust multi-month diplomatic takeout. And initial agreements. So premium unwinding, global energy desks are aggressively stripping out the war risk premiums that previously drove Brent to artificial peaks of 126 earlier this year. So if you look at the domestic impact on India's MCX, crude oil futures are trading deeply in the red. This is structural fantastic news for Indian macros. So it cuts the country's oil import bill and immediate relieves operational cost pressure for aviation, paint, tire, and specialty chemical manufacturers. So, if we look at the precious metal like gold and silver, which dropped to 8-month low, safe haven assets are facing severe liquidation in this morning as capital actively rotate back into high risk equities. So, on global exchange, spot gold broke beneath the psychological critical benchmark of 4,000 per ounce dollar, sparking massive stop loss triggers across institutional trading desks. So when we look at the domestic spot rate and MCX dynamics, in the domestic Indian physical markets, all Indian association precious metals have extended a painful 2-day correction. So 24K pure gold tumbled significantly down to 1,000, 48,100, 1,48,100 per 10 grams, inclusive of local taxes, representing a sharp drop from earlier weekly highs. So 22K jewelry gold settled at approximately 1,32,300 per 10 gram, and physical silver facing an even harsher sell-off after witnessing a massive 10,500 single-day crash earlier in this week. So it dropped another 4,000 to trade at 2,31,100 per kilogram. So the twin pressures of incredible robust US dollar index. We'll just put the gold chart here. So the twin pressures of an incredibly robust US dollar index and mounting expectations of tight global monetary policies are making non-yielding bullion highly unappealing furthermore as systematic fear evaporates from the market. So the absolute lack of protective safe haven demand is forcing retail to institutional investors to book profit and reallocate the cash directly into the booming equity markets. So when we look at the industrial base metals like copper and aluminium, they are consolidating in sharp contrast to defensive liquidation seen in precious metal. Industrial base metals are exhibiting resilient range-bound behavior on the London Metal Exchange and domestic MCX. So found a in copper we found a solid structural bottom at $5.97 per pound, which is around 13,181 per metric ton. While copper prices are technically down roughly around 6.3% over the last month due to slow inventory drawdowns in Asian warehouses. The metal is holding a solid 17.6% net gain on a year over year basis. So the industrial demand is receiving a strong psychological boost this morning from global semiconductor industry, highlighted by Micron Technologies' massive revenue guidance. So because high performance AI data centers, power grids, and electric vehicle architectures are exceptionally copper intensive for tech demand narrative, which is preventing a broader metal market sell-off. So let's understand agriculture commodities supply stocks hit the soft basket. So away from the financial lines, the soft commodity basket is experiencing intense localized volatility dictated purely by global climate patterns and supply side constraints. So Arabica futures are trading firmly at 294.10 US cents per pound, holding on to a solid structural gains. So extreme weather patterns across central Brazil and shifting harvest volumes in Vietnam continues to keep globally stockpiles tightly squeezed. So spices and grains on the domestic NCDX and MCX platform. Agricultural counters are seeing a selective positioning, which is mentha oil and cotton futures are tracking flat to mildly positive, while the global gains like corn around $4.7 per bushel and wheat $585.75 per bushel remain completely anchored near their annual lows due to bumper cross across European and American agricultural belts. So this is the news update regarding the commodity markets. So let me know your favorite commodity where you are speculating on. So let me know your views on precious metals like gold and silver. Share your views in the comments. So we'll talk about the global markets. We'll just know what's happening in the global markets. So we'll look at the Wall Street. US equities closed out high volatile. So there was a mixed session on Wednesday evening while the broader market advanced by nearly two out of every three stock on the S&P 500 finishing in the green. So the tech-heavy indices were dragged down by acute valuation fatigue in the mega cap technology firms. So when we look at the major US closures, Dow Jones Industrial Average rose 182.06 points to close to 51,849. The Dow Jones easily outperformed due to its heavy oriented towards industrial and cyclical value stocks, so which are heavily benefiting from falling energy cost. So when we look at the S&P 500 index, it has edged down a marginal 7.24 points, which is around 0.1% to 7,358.22, entirely anchored down by a few overstretched tech gains, despite the highly positive broader market breadth. So Nasdaq retreated 110.40 points, around 0.4% to land at 25,476.64. So let's look at the corporate anchors and structural rotation. So the downside on Wall Street was heavily driven by 2.3% drop in Microsoft and 4.6% slump in Oracle, as portfolio managers aggressively lock in profits from late stage software names. Additionally, plunging oil prices dealt a severe blow to traditional energy sector, with Exxon Mobil shedding 2% and Chevron falling 2.6%. So conversely, the massive winters of the nights were the U.S. home builders following the passage of highly stimulative industry uh, beneficial federal legislation. KB Home skyrocketed a massive 16.7%, while Dr. DR Horton jumped 6.7%. So, furthermore, a significant structural shift is underway in the blue chip index. Alphabet is officially replacing the Rizon in the Dow Jones Industrial Average on Monday, becoming the fifth magnificent titan to enter the historic index alongside Apple, Amazon, Microsoft, and Nvidia. So the Micron after hours fireworks. So while the regular trading session ended in the red for tech, the entire narrative shifted completely in the late after hours trading, which is followed the quarterly earnings released from Micron Technology. So the memory and semiconductor giant reported a speculator third quarter result, showing that its quarterly revenue literally quadrupled year on year. So, driven by the insatiable global institutional demand for high bandwidth memory required for AI data centers, and crucially, Micron issued a historic guidance for the current quarter, forecasting the revenue to hit an unprecedented 50 billion dollar. The massive beat has single-handedly broke the short-term tech and correction, which is sending a wave of reassurance globally that the structural hardware phase of the AI cycle is nowhere near peaking. So let's understand the Asian markets. Asian markets were a semiconductor-led rocket ship. So it is triggered directly by the Micron earnings. Beat and relief from falling oil prices. Asian bourses are experiencing an absolute buying stampede this morning. South Korea, the absolute star of global trading today, the COPSI has soared by an incredible 5.65%. So South Korea memory chip makers are leading the charge, which is a heavyweight SK index surged a breathtaking 11% in early trade, following its blockbuster announcement that it plans to aggressively raise up 29 billion via spin-off Nasdaq listing to fund massive AI infrastructure expansion. So when we look at Japan Nikkei 225, it is trading with the immense strength up to 2.31%. Japanese technology exporters, automation firms, and chip equipment manufacturers are seeing aggressive institutional accumulation. So China, Shanghai Composite, which is trading mildly in the green. So it's up by 0.36% at 4,126 points, stabilizing graceful as broader regional liquidity lift. So the lone underperformer in Asia is trading down by 0.36% to 8,776.40. So Australia's heavy index concentration is commodity miners and gold producers is working against it today. So as precious metals and energy trump globally, furthermore domestic sentiment was hit after Zudo Capital plunged 38% on a severe profit guidance downgrade due to asset quality. So let's understand the bond market and the high stakes PC inflation update. So in the fixed income space, global sovereign bond yields are easing off their recent peaks, providing a much needed breathing room for equity markets. The US 10-year Treasury yield softened significantly to 4.40%, down from 4.50% earlier this week. So while the short-term policy sensitive 2-year Treasury yield cooled to 4.15%. So however, global macro desk are completely frozen ahead of Thursday's afternoon's US personal consumption expenditure price index release. The Federal Reserve's absolute preferred inflation metric. So the Wall Street economists are forecasting the annual headline inflation for May will clock in at 4.1%, which would mark a 3-year high. So because Federal Reserve Chair Kevin Walsh heavily emphasized the central bank's rigid stance on absolute price stability last week, higher than expected print today will instantly cement the late 2026 hike. So conversely, if the numbers shows a cooling pattern due to a recent drop in commodity price, it could kick off one of the biggest global equity melt-ups of the year. So this is about the update regarding the global market. So we'll see how this impacts today's stock market session as well. We'll keep on updating how it has affected the stock market sessions, and let us also know your views on this. So we'll be back with the option chain analysis and index analysis within 15 minutes. So we'll just look at the index and Nifty 50 option chain analysis. So first, when we look at the technicals, we saw that there was a supply zone here. We had marked the supply zone. So price has closed above the supply zone, showing a strong bullish momentum. But since the price has overextended from yesterday, and there's a Sensex expiry as well today. So price might react to any of the resistance level. We can see there's something. There's a resistance at 24,267. So we can expect the price to react there and collect the opening price liquidity. So we'll just confirm it with open interest analysis. So the live Nifty 50 index spot is trading firmly at 24,193, which is up by 0.7%. So India VIX is standing at 12.66, which is down by point 73, showing a notable reduction. This compression and volatility implies a flattering option premium structure, making condition ideal for directional intraday momentum without higher fear-induced swing. So we'll just look at the put call ratio. So the live PCR stands at 1.195, displaying a distinctly bullish undertone. So a PCR above 1 indicates that put writers are comfortably outnumbering call writers. So we'll look at the max pain level. So max pain level is situated squarely at 24,100. So we can look at the option chain, right? So, which implies the option sellers currently view this as the anchor zone around which the highest amount of option value would expire worthless. So, we'll understand each strike-wise open interest analysis. So, if we look at the immediate battleground at the money, 24,200 strike, which you can see here in the dash in the chart, where the price is currently trading at. So this is the immediate target. Reveals a prominent cluster of red bars called OI with distinct diagonal hatching signaling a heavy intraday increase in call writing at this level. Call writers are aggressively building a temporary ceiling here to protect against runway rally. So 24 150 strike. Nifty is actively scaling above this point. If you look at this here, the combination of green and red bars indicate a tight tussle, but the spot trading at 24,187 shows that call riders at this strike are facing immediate pressure to cover their positions. So, if you look at the open interest change, put OI has changed around 47.9 lakhs, and call OI has changed around 13.73 lakhs, where both put OI and call OI is totaling at 62.2 lakhs and 18.31 lakhs respectively. So let's look at the institutional support floor. So if you look at the institutional support floor, 24,000 strike, which acts as a strong multi-day bedrock. So this remains the ultimate fortress for the bulls. So the green bar is the green bar at 24,000 is towering and exhibits an increase in open interest. So we can see here. I will just show you in the chart. So making an any downside below 24,000 highly improbable for the session. So the immediate intraday support is 24,100 strike. So there's a significant build-up of put OI is evident here. Since the spot is safely tracking near 90 points above this, 24,100 strike has solidified as a strong trailing support flow for the remaining hours of the trade. So we'll just look at the 24,500 strike. So there is a prominent red pillar representing maximum call oil. So this acts as a microscopic target for the entire session, but it remains irrelevant for the immediate intraday buyers. So intraday trend, we'll just conclude with the intraday trend. So the intraday trend is strongly bullish or buy on pullbacks. So if the market experiencing a minor cooling off dip towards 24,100 to 24,150 zone, it should be treated as a tactical entry point. The immediate intraday target remains 24,200. Decisive hourly breakout above the heavy call rating visible at 24,200 could prompt a swift short covering spike towards 24,250. So a trailing stop loss would be strictly maintained just under 24,100 put fortress. So we'll just mark these levels in the chart. So 24,200 acts as a strong resistance. So price has exactly reacted to that level and it has given a strong bearish engulfing candle. But there is a strong demand zone as well. So we'll also mark 23,150 which acts as a strong support. So these are the levels to look at. Wait for the breakout above this level. Once you get a strong breakout above this level, then the next resistance to look at would be 24,250 and 24,300. So hope you got a clear idea on Nifty technical chart. We had used option chain open interest to identify the intraday movements. So let me know if you have any doubts related to this. Just put in the comments. So we'll just look at the bank nifty now. So the bank nifty is currently trading at 58,000. I'll just change the chart to bank nifty. It's currently trading at 58,490. So the max premium is located much lower at 57,500. Let's see here. This massive gap between the live spot and max pain shows the market has surged rapidly away from the older institutional concentrations, keeping option sellers on the toes. So India VIX is standing at 12.76, which is lower by 0.63. Just like the broader market, the cooling volatility is crushing options premium. There's a theta decay, giving directional buyers a clear tape, but reducing the margin of safety for option sellers. So PCR standing at 0.88, 0.866 interestingly. So it's 0.206 right now. So while the Nifty is deeply bullish, Bank Nifty's total PCR shows a more balanced to cautious positioning. The lower PCR is heavily influenced by massive call concentration, which is sitting right above the current spot. So we'll see strike price open interest. Looking closely at the bar chart, we can see the institutional positions reveal clear definitive lines of friction. So 58,500 strike. Look at the massive towering red bar at 58,000. It stands head and shoulders above nearly every other strike on the visible chain. You could see this here, 58,000. So even though the spot has cleared past this to trade at 58,399, which is currently trading at 428, the massive call congestion means a heavy concentration of option sellers are sitting deeply trapped or aggressively defending this zone. So then look at the 59,000 strike. This severe as this serves as the secondary massive ceiling. So the red call bar is the second largest on the chart, providing the institutional traders view 59,000 as the definitive upper bound for the immediate weekly horizon. So if we look at the 58,500, which is immediate ceiling, directly ahead of current spot, which is sits at 58,500 strike, the red column shows a prominent spike in the intraday call ceiling. Call rating. This acts as the immediate tactical resistance if the bulls cannot break past 58,500 decisively, and the mean reversion pullback is highly likely. So we just mark these levels on the chart. So this is the strong resistance zone. So you can see that the price has rejected. There was a short-term rejection from this moment. So we need to look the price to break above this level so that we'll have a stronger confirmation. So the intraday conclusion for this would be range bound with the bullish bias, facing a overhead supply. Because the live spot is at 58,444, 58,444, and the immediate fresh call rating is at 58,500. The trading the index requires patience. So do not chase the current price blindly. wait to see if Bank Nifty can breach and hold above 58,520. It clears that fresh intraday call waiting hurdle. It will trigger a rapid short covering squeeze towards 58,800 to 59,000. So given high concentration of calls at 58,000 and 58,500, a minor profit booking dip is completely natural. So aggressive intraday traders can look for support groups near 58,150 to 58,200 to target move back up. Strict trailing stop loss should be placed just below 58,000. So these are the views for today's Bank Nifty based on technical chart and option interest analysis. So we'll just talk about Sensex within few minutes. Until then, let me know if you have any doubts related to Nifty and Bank Nifty and what's your view on it. Have you analyzed the option chain open interest and mark levels? So keep eye on these levels. So there's a lot of chances that market will react to this level. So we'll be back with Sensex option chain analysis within 5 minutes. So until then, let me know if you have any doubts. Put it in the comments. So we'll just look at the Sensex option chain. So if we look at the Sensex option chain, we could see that the live spot price is at 77,525. So the max pain level is situated at 77,500. So the fact that the spot price is hovering just 51 points, yeah. So situated at 77,500, the fact that the spot price is hovering just 51 points above the max pain mark implies that option traders currently see this level as the ultimate equilibrium point for today's session. So when we look at the PCR for it stands at currently it stands at 1.243, which is indicated as highly bullish. And while the total overall PCR is at strong 1.5334, this reveals massive put rating. So this reveals a massive put rating is currently dominating the option landscape, offering a solid cushion on any intraday dips. So if you look at the India VIX, which is standing at 12.77, which is down by 0.62, the cooling down of the volatility index is accelerating premium decay, benefiting option sellers who are defending key strikes today. So we'll just look at the strike wise open interest and OI breakdown. So if you look at the 77,500 strike, uh, this is the immediate flow. This is the most critical strike on the board. It features a massive covering green puts, green bars, which indicates put OI. We can see a change of 76.30 lakhs, where call OI has just increased by 39.17 lakhs. So there is a significant diagonal hatching indicating aggressive intraday additions. Because the spot is at 77,551 point, 77,516.74, put writers have firmly anchored this zone, turning 77,500 is a major support level. So I just mark this level in the chart. So So we can see a demand zone, previous supply zone, which is currently acting as a demand zone, complements to it. It's currently exactly is at 77,483 to 425, where we can mark this 77,500 level as well. So it exactly gave a bounce from here. So we need to look at the next resistance level where the price might head to. So looking at the 77, 200 and 300 strikes, we can see further down the chain large pillars of Putoy are visible, indicating that institutional players have a deep multi-layered safety net for index. So we'll just look at the overhead ceiling, 78,000 strike. If we look at the 78,000 strike, we have a strong resistance level. So this is the major institutional resistance. Looking at the right of the spot line, the red bar call OI at 78,000 stands out very prominent. So showing severe intraday calls addition, this is definite upside ceiling that option sellers are fiercely defending this series. So if you look at the 77, 600 and 700, exactly now the price has reacted to the 77, 600 level. So immediate overhead friction is brewing right above the spot. The red bars at 77,600 and 77,000 showing a continuous building of all open interest, acting as immediate speed bumps that the bulls need to clear and trigger a larger move. So we'll just look at the practical intraday trading outlook. So market stands strongly bullish bias, buy on pullbacks near support. So with a stellar PCR of 1.217 and spot trading successfully above 77,500 max pain level, the market structure heavily favors the bull. So the pullback play any minor profit booking dip into 77,480 to 520. Window is a highly attractive entry zone for longs as the massive put writers at 77,500 will act as a structural shield. So a strict stop loss can be maintained just under 77,450. So if you look at the breakout play, keep a close eye on the immediate call writing at 77,600. So if the index breaks and holds above 77,620 on an execution level, it will likely catch an immediate intraday call writers off guard, forcing a short covering squeeze towards 77,750 to 77,800. So this is the analysis on Sensex based on option open interest. So we have also marked the technical levels in the chart. So we could see a strong breaker block acting as a demand zone. So we had also said that 77,600 acts as a very strong resistance level. So we'll just mark the two as, yeah. So this acts as a very strong resistance level. So keep an eye on this level. So this is about the Nifty. So we have covered all the index, Nifty, Sensex, and Bank Nifty. So let me know your plans for today. Put it in the comments on what's your views on Nifty and Nifty, Sensex, and Bank Nifty. So we'll be next discussing about the stocks to look for today based on open interest, change in open interest, and we'll also be covering the heat map where we see which sector is performing well and which sector is in negative. So we'll be back in another 15 minutes. So until then, let me know your doubts in the comments based on the Nifty, Bank Nifty, and Sensex, and let me know your views on it.
Hi guys, welcome back again. So, hi guys, welcome back. Now we are going to talk about the open interest. So, we have something very special today. Our open interest data is landed for June 25, 2026, and I have the NSC spreads in OI report. So, right here in front of me. And for those who don't know, open interest is like a extra of the market. We already know actually. So it exactly shows where smart money, institutional investors, big traders, FIIs are placing their bets. When OI spikes by 15, 18 or 20 overnight, something is happening in the stock and today's data is screaming at us. We have top 7 stocks with the AI spreads between 17% and 21%. It is extraordinary movement. So yeah, I'm just going to break down every single one and I'll also tell you why it moved and what news is behind it, and most importantly, what you should watch for today. So, the first one will be Bandhan Bank with the OS puts of 20.83%, underlying price of 198 rupees, and it has changed OI in 10,919 increase, new contracts. And nearly 11,000 new contracts have been created overnight. So this is not a random. Something is happening at Bandhan Bank. So let me just tell you what happened. So yeah, the Bandhan Bank will hold a meeting of the board of directors today, June 25, 2026. So this is a scheduled board meeting, and the market is clearly positioning ahead of it. The board of Bandhan Bank on June 15, 2026 approved the proposal for sale of identified non-performing assets like NPS with more than 180 days overdue. So Bandhan Bank's net profit rose 68.02% to 534.14 crore rupees in Q4 FY26. It's a massive turnaround from 317.90 crore the previous quarter. Let's just connect the dots. Bandhan Bank has board meeting today, which I mentioned, and the bank has been is on the recovery journey. Q profit jumped 68%, and they are actively selling bad loans, NPS. So SBI's mutual fund increased its stake above 5%, and now just because the before the board meeting, OI spikes 21%. The market is betting something big is going to be announced today. So what could be announced is fundraise announcement that they may do a QIP or rights issue to strengthen the capital base. So the second one will be a new MD or CEO appointment update, or third maybe NPA sale details, the size of and buyer of those bad loans, and the final maybe the strategic plan announcement. So this could be announcement will be coming further. So just keep an eye on this and the updated news. And according to 24 analysts, the average rating for Bandhana Bank is buy with a 12 months target of 191.71 to the current price is 207, which means the stock has already crossed the analyst target, suggesting further upgrades may come. Yeah, the current price is 207. Week range 134 to 218. The stock is nearly it's a 52-week high. If the board meeting announces a positive, fundraise at good price or a strong NPA resolution, the stock can test to 218 and above. So immediate support at 198 to 200. So if you are in this stock, hold through today's board meeting. So if you are not in, wait for the announcement before entering. So do not buy blind ahead of the board meeting. That's speculation, not just investment. Yeah, the second one is Manapuram Finance with the OI spot of 20.50, underlying price of 311, and it has changed in OI of 5,381 new contracts. So Manapuram Finance. Now this is a very interesting because the gold prices are falling right now. You already know, and Manapuram is India's second largest gold loan company. And just let me explain the complexity here. So here's the interesting situation. Manappuram just got hit. It fell by 7% because gold fell. But now open interest is spiking 20%. Why? Just because smart money is now asking, has that sell-off been overdone? Let me just explain business and model simply for you guys. Yeah, I'll just tell you very clearly. Manapuram give you a loan against your gold jewelry, and you give them gold. They give you cash and they charge interest. When gold prices are high, the loan to value ratio is better. Customer borrow more, business grows. So when gold falls, the customer have to deposit more gold to repay the faster. So there is a short-term asset quality pressure, right? So but here in this situation, and this is a key, Manapuram doesn't lose money when gold falls. The gold is collateral. They can liquidate it. The real risk is if gold falls catastrophically and suddenly, so at 4,100 per ounce, gold is still extremely elevated historically. And the fundraise approval, NCDs, bonds, commercial papers. These all tell us Manapuram is preparing to grow its loan book. That's actually bullish. They are raising capital to lend more. And yeah, Manapuram is at 311. The stock was at 361 or 372 as per Axis Securities recent target. So it has fallen from those levels purely on gold price fear. If gold stabilizes above $4,000, which is likely will because the long term demand from central banks globally remains strong. So Manappuram is actually a buy at these levels. So supported 295 to 300 and target maybe 360 to 370 over 2 to 3 months. So risk, yeah. Further gold price falls below $3,800. So that's the actual risk here. Yeah, the next one is Hero Motor Corp, which is uh, which is a high OI interest spread of 18.7570. So underlying price at 5,020, which has changed in open interest of 11,433 new contracts. Yeah, 18.7 percent OI spot with value of 94,661. The new contracts, that is the highest value among today's top seven. So somebody very big is taking a positions in Hero Motorcorp. Yeah, the Hero Motorcorp is world's largest two-wheeler manufacturer. We already know has everything going right for its right now. So number 1 to 12% volume growth is in May with 4.96 lakhs retail registration. That's a massive number. And the number two is they launched India's first ever flex fuel motorcycle this month, and historic milestone. It is a Yeah, it is we can say it's a historic milestone. So the number three will be global sales jumped 78%, They are expanding in Latin America, Africa, West India. Yeah, the number four news is 212 new product launched planned for FY27, and Q4 profit jumped 26%, and lower crude means lower input cost for their manufacturing, of course. So you guys be noticing Hero Motocorp has 94,661 contracts traded. So that is the most active stock in today's OI split list. This is not a small trader doing this. This is institutional buying, mutual funds, FIIs, domestic funds. Someone is accumulating this seriously. Since because of this scenario, this is a medium term buy support at 4,850 and target near 5,400 to 5,600 over 3 months. For long term investors, this is a core portfolio holding. Yeah, the next one is Naukri Info Edge with increment of Y in of 18.13%, underlying price of 993. It has 10,984 new contracts. Yeah, the same Naukri.com Info Edge India has had added 18.13% of OI test with 27,244 contracts. Now this one has a specific reason and it connects directly to what we talked about yesterday with the IT sector pain. So the Naukri.com is India's large job portal, which we already know and very aware about that. Their revenues are directly linked to hiring activity in India. When IT companies are hiring, so TCS, Infosys, Wipro, Naukri earns big from job postings. When hiring slows, Naukri suffers. Now, think about what's happening right now. IT sector is under severe pressure, and TCS, Infosys, HCL are cutting or slowing hiring due to global uncertainty. And AI is also like replacing certain IT roles. And US Fed rate hike fears are like slowing tech spending. This should be bad for Naukri. So why is like OI spiking up to 18%? What do you think? Here's the actual smart angle for this. So India's non-IT hiring is booming. Manufacturing, logistics, FMCG, retail, and banking. All these sectors are hiring aggressively thanks to PLI schemes, infrastructure boom, and domestic consumption recovery. So Naukri has over 90 million registered job seekers. So they are also invested in Zomato, which is now called Eternal, and Policy Bazaar, 99 Acres, all these property portals. And this portfolio is much more diverse than IT hiring. And also, Naukri is scheduled to report its Q1 FY27 results shortly. So the OI buildup could be pre-earnings or positioning. Currently Naukri at 993. Technically, the stock is near an important psychological level, which is nearly 1,000. And if IT hiring recovers most micron results, Naukri may flies. If IT pain continues, Naukri faces short-term pressure. This is a hold for existing investors, cautious buy for new investors at 960 to 970 support. Target will be nearly 1,100 to 1,150 on a recovery, and you should keep a stop loss at 930. Yeah, the next one is Supreme Industries with the open interest increment of 17.99, underlying price of 3,431. This is actually very different kind of stocks from everything else we have already discussed, sir. This is a pipes and plastics company, we already know, and it's telling us something very important about the Indian economy right now. And Supreme Industries is India's largest plastic product company. They make pipes, water pipes, agriculture pipes, draining pipes, plastic furnitures, and films, composite products. Their business is a direct proxy for three things. One is construction activity, agriculture, and government infrastructure spending. So, what may be the reasons for this why spiking? Yeah, let me just break that for you. One is monsoon is higher arriving, and India's southwest monsoon is progressing. Farmers are preparing, and agricultural pipes demand is about to spike every year at this time. Supreme Industries see a seasonal demand surge. And the second thing, housing, housing boom. India's real estate sector is on fire. Lodha, DLF, Prestige, all buildings at record pace, and every new building need supreme industrial pipes. The real estate Y is also high in today's data. So Lodha is in the list in that list. And the third reason is the lower crude, lower raw material cost. Yeah, plastics are made from petrochemicals, which are come from crude oil. Crude at 73 to 74 dollar per barrel, which means Supreme Industries input costs are like falling. When raw material costs fall and selling price stays stable, margins expand, and this is directly positive for Supreme. Yeah, just remember Supreme Industry is like currently at 3,431. This is a quality mid cap stock with a clean balance sheet and consistent dividend history. Support is at 3,200 to 3,300 over 3 to 4 months, and the crude oil tailwind plus monsoon demand plus housing boom is three bullish catalysts at the same time. This is one of the favorite setups from today's OI data. Yeah, the next one is TVS Motor with the OI sport increment of 17.31%. Underlying price is 3,589. And yeah, currently with 82,624 contracts, which is a huge volume. And when you put TVS Motors alongside Hero Motor Corp, both in the top seven today, and it's telling you entire two-wheeler sector is seeing institutional accumulation. TVS Motor is the most exciting story in India's two-wheeler market right now, and they are the fastest growing premium two-wheeler company right now. While Hero Motocorp is on the volume king, TVS is the premium and EV king. And TVS, some growth vectors are the first one is Apache motorcycle. The Apache series is dominating the 160cc to 310cc premium segment. Youngsters, of course, love it, and yeah, that's the direct impact on it. And the second one is iQube EV scooter. TVS electric scooter is the second best selling EV two wheeler in the India after Ola Electric. And the third one will be export growth. TVS exports to 60 plus countries, and their international business is growing faster than domestic. And the fourth one will be Norton Motorcycles, which is UK. TVS acquired the iconic British motorcycle brand Norton, which is called Norton, and they are launching premium bikes globally under the Norton brand, targeting Harley Davidson's customer base. If the India and US trade deal comes through and negotiations are progressing, Harley Davidson gets better access to India, but simultaneously, Norton Motorcycles owned by TVS gets better access to US markets. So TVS could actually benefit from the US trade deal through their Norton brand. This is a sophisticated angle that most retail investors are missing. So TVS Motor is currently at 3,589. This is one of the most premium quality auto stocks in India. It has consistently both outperformed the Nifty over 3 to 5 years, supported 3,400 and over the next 3 to 4 months. Our SIP investors, this is stock worth owning for 3 to 5 years coming. And the EV transition plus premiumization plus exports is may lead to a triple growth engine here. Yeah, all right. But beyond the OI top seven, there are specific stocks you should need to watch today based on the upcoming events. Let me just quickly run through these stocks now. The first one is Indigo. Yeah. Uh, Indigo is a crude oil story. Every $5 fall in crude saves Indigo's approximately 1,500 to 2,000 crore annually. Yeah, crude has fallen $40 per from peak, and it's potentially 12,000 to 15,000 crore of annual cost saving, which is coming to Indigo, and that is why the OI is like exploding. Watch 5,200 as a support, and yeah, you're good to go. And yeah, Indigo reportedly a net loss of 2,400 crore for FI26, primarily due to the forex losses and elevated fuel costs. But its FI2030 roadmap targets 200 miles passengers and 3,000 daily departures and 550 plus aircrafts. And also Jeffries and overweight rating on Interglobe Aviation, highlighting what is described as its scale and cost advantages. The stock is benefited directly from falling crude. Brent near $74 dollar means AFT costs like relief worth hundreds of crore per quarter. And the next stock is IRFC, and yeah, you should don't forget IFC, of course, because retail window opens today at 9:15, which is already open, and floor price of 91. The stock is trading at 90 near 93, 92, 93, and you are getting it at roughly market price or a slight discount for long-term SIP investors. So IRFC is a zero default risk quasi-government bond that also give you equity upside. This OF is worth participating in. Yeah, the next one is Bandhana Bank, which I already explained, and we already spoke about that. The board meeting, yeah, the news we already discussed, already covered. What's the announcement coming out of today's board meeting and trade accordingly. Bajaj Auto. Bajaj Auto had a ransomware attack Tuesday, which I already mentioned yesterday also, and today you should watch. Are there any further disclosures? Is manufacturing impacted, or the buyback record date was yesterday? Any negative update on the rainstorm extent is may lead to stock falls. So clean bill of health update leads to stock recovers. And the next one is S Bank. The pre-announcement build-up for S Banks on June 29. Board meeting will happen over the next 2 to 3 days. Watch for block deal activity, FII buying signals, and option chain build-ups in S Bank. So let me just wrap it up and give you. outlook of all the OI interest and stocks of the day. When Hero Motorcorp and TVS Motor both appear in the top OI stocks on the same day, smart money is taking a sector call on two wheelers. So rural India recovery, export growth. So monsoon demand, all of this is aligning. When Supreme Industries appear, it tells you construction and agriculture are strong. So when Indigo appears with the highest value, it tells you aviation is expected to recover as crude falls. The overall message from today's OI data is domestic India stories are being brought, and IT, global tech, metals, those are under pressure. But rural India, auto, aviation, housing, customers, institutional money is buying those stories aggressively right now. So that is your trade thesis for the next coming 3 months. So if you have any doubts in the current session or the discussion, you just let me know in the comments, or just let me know whatever, like if you have any taken any trade, currently you are holding any position or currently you are in any trade, just let me know in the comment section. We'll analyze the particular chart and get to know better. Yeah, we'll be back at 12:30 for heat maps, and we'll be telling the stocks which are performing, which are outperforming, and which are underperforming by sectorial wise. So yeah, just be with us, and we'll be back at 12:30. So according to the let's let's start now. Welcome back. So according to the sectorial heat map, we'll be discussing about outperformance and underperformance today for today June 25, 2026. So there is a complete sectoral heat map in front of me, and I want to do a full breakdown. Green zones, red zones, which sector to enter and which to avoid, which stocks inside those sectors are running right now. So, and also which are sinking. This heat map is pulse of the market, and it tells you in 1 second where institutional money is going today. And today's heat map has a very clear story. Let me just tell you what it is. So before I go stock by stock, here's the one-line summary for this today's heat map. Crude oil is falling, which leads to auto wins and reality wins, and also it leads to bank wins, all the banks. But metal loses. So oil and gas loses. Media is flat. That's the theme of 2026 June 25 today, which is in one sentence. So we'll go deep sector by sector. So we'll go to the outperformer. The one is Nifty Auto with 2.98% of increase, and this is a king of today's session. This is not a coincidence. Nifty Auto is up nearly 3%, and it is the single biggest outperformer across all 23 sectors, which I'm looking at today's heat map, and 2.98% of increment in a market where Nifty 50 is up for just 0.69%. Auto is running it 4 times the benchmark price. So something is very big is happening here. So why auto is flying today? We'll get to know that. But there is a three reasons why auto is flying today. The first will be crude. Of course, crude is at 70 to $74 per barrel, is at a nearly 3 year low. Every 10 rupees will fall in petrol price, means like more money in the pocket of middle class India. So as they spend it on two wheeler and also cars, yeah, that impacts. So monsoon is also arriving, and rural demand for two wheeler also always like spikes during kharif season. So yeah, and the third is the OI data we saw yesterday showed Hero Motocorp and TVS Motor with 80 to 90% OI spots. Institutional accommodation was happening yesterday, and today is at showing up in the price. So let me just break down the four stocks which I want you to watch specifically for today. The first one is Maruti Suzuki. Maruti has the highest weightage in Nifty Auto, which is 17.77%. When crude falls, Maruti's customer, the middle class Indian car buyer, feels more confident. Yeah, Maruti CNG portfolio benefits more, like even more. Plus, the India and US trade deal, like excitement, is boosting sentiment. Supported 13,000, and the target may be near 14,200 to 14,500. The next one is Hero Motocorp. We covered this in previous session already, which is 18.7% OS per May sales at 12%. Flex fuel launch, yeah, 12 new products coming. Also the rural recovery. This is multi-month buy support at 4,850. Target maybe near 5,400 to 5,600. Yeah, the next one is TVS Motor, which is OS per of 17.31. and yeah, which is running today. EV plus premium bikes and plus Norton global brand. There's also a 78% of export growth. So one of the most exciting auto stories in India right now. So the next one is M&M top 50 Nifty 50 gainer today. So Mahindra is the heaviest weighted stock in Nifty Auto at 16.37 percent. Their SUV portfolio, Thar, Scorpio, XCV 90 is dominating India's fastest growth. So yeah, in a vehicle segment, and lower crude is equal to more disposable income, which is leads to more SUV purchases. So this is the stock leading the whole auto rally today. So yeah, the next one is auto sector trade call. Nifty auto at 27,169. Key resistance at 27,500 to 28,000. For short term traders, momentum is clearly bullish. Ride with stop loss. So for investors, buy auto stocks on any dip. The macro tailwinds, crude falling, monsoon, EV transition, premiumization, like are all pointing up. And the second is Nifty Realty, who are outperforming second best today. The with 1.47% of up. So real estate is making a comeback after weeks of pain. So let me just explain you why it's happening. So there is actually three reasons why reality is recovering. First one is lower crude, of course, lower steel and cement input cost, better margin for builders. So second is RBI has been cutting rates, repo at 5.25, and also lower rates always boost real estate demand because home loans become cheaper. And the third one is FY27, Q1 launches from Godrej Properties, Oberoi Realty, and also Showbargit generating strong bookings. The demand is actually real here. Yeah, also big news for specifically today. Vedanta is setting up a realty arm, a brand new real estate vertical, which signals fresh institutional capital entering the real estate space, boosting the sentiment across the sector. Also, Embassy Group signed a Lucknow MOU expanding commercial real estate into tier 2 cities. Another positive for the sector's long term growth. So, in top stocks in the Nifty Realty are one is DLF. It's India's largest developer. They are the luxury housing kind Delhi NCR. Every RBI rate cut adds to demand. Their rental income from DLF Cyber City commercial parks is growing 50 to 20% annually. So Nomura has DLF as a buy with strong conviction. And the next one is Lodha developers. We saw Lodha in yesterday's OI data too, with 10.47% of OI spread. They are now delivering 70%, 17% pre-sales growth in FI27 according to the Nomura. So disciplined execution, right? Strong Mumbai presence. This is the safest large cap realty play. And the next one is Prestige Estates. Yeah, Prestige Estate is dominating South India, Bengaluru, Hyderabad, Chennai. Their Golden Grove project in Hyderabad and projects in Bengaluru are like generating strong bookings. MK has a strong conviction on this name. And the next sector is Nifty Bank. Banking is up today, and that's important because Bank Nifty is at 58,607, and it is getting close to a resistance zone, which is 58,800 to 59,000. So why you think banking is up? Let me just tell you, RBI's NRI FCNR deposit rate liberalization is bringing foreign capital falling through. So falling through leads to lower inflation, less chance of rate hike, and on NIM stays healthy. And SBI, HDFC, and ICICI all reporting strong at Q4 results. So ICICI Bank with 10.32% of OS word from yesterday's data. Today is it's running strong Q4 digital franchise, retail growth. So target of 1,550. So HDFC of 6%. Yeah, we should talk about underperformance now. The first one is Nifty Metal. Metal is the biggest underperformer today, and it's been the worst performing sector in the June. Let me tell you why, and whether you should be worried or you should take an opportunity. So yeah, here's the actual honest truth about metals today. The first one is Fed rate hike fears are strengthening the US dollars, and stronger dollars makes metal expensive for buyers in the other currencies. So global demands appears to fall. And the second is silver crashed, which is 3.2% on MCX and globally. Hindustan Zinc, India's largest silver producer, is directly hit. Third one is the sector has massive 20% run before June. The smart money is taking profits. This is not a sector collapse, but it's a consolidation after a big rally. And these are some stocks which are getting hit in the metals. One is Vedanta. It is down by minus nearly 7%. Yeah, in the last recent sessions, which had a massive block deal. Promoter Twinstar sold 6.5 crores shares worth 1,896 crore at 291. The supply overhang. Second one is Hindalco. It makes aluminium primary raw material for aviation, autos, packaging. When global growth fears come in, aluminium demands fear come in. So yeah, Hindalco's Novelis US business is a monster. No, this is buy at 920 near 920 930 for long term. And the next one is Tata Steel. Both under pressure. China's steel demand is soft, Europe is weak, but India's domestic steel story is intact. Infrastructure boom, PLI, housing, these are medium term holds. Don't panic, sell. Nomura is both on buy with the 50 to 20% upside targets. And the second sector is Nifty Media is barely negative, down by 0.06% at 1,518. But in a market where everything else is green, flat is underperforming. So let me just tell you what's happening in media. The Z Entertainment FIFA deal gave a 7% pop a few days ago, but reality is setting in, yeah, 69 out of 104 World Cup matches are in overnight hours of India. So advertisers are not excited about paying premium for 2 a.m. matches, right? So Z's new sports network, Unite 8 Sports, is unproven for now. And the PVR Inox, the multiple chain, is facing competition from OTT, Disney Plus, Hotstar, Netflix, JioStar, all eating into the theater audience, and the only saving grace is blockbuster releases. And the another one is Nifty Oil and Gas. This one surprised many people. Crude is falling, but oil and the gas sector is down. Let me just explain this more. When crude falls, it benefits refiners like HPCL and BPCL on margins, but it hurts upstream products like ONGC and Oil India because they earn less revenue per barrel. And the big oil index weights is an exploration companies, not refiners. So net falling crude is actually a mix for this index. The next one is Nifty Consumer Durables. ACs, refrigerators, washing machines, slightly negative today, but this is not a concern. The sector is for massive summer season with a heat wave across India. Voltas, Havels, Blue Star, Crompton, these are all the trading near like 52 weeks high because of the record AC demand this summer. The monsoon arrival will temporarily slow AC sales but boost fans, coolers, and appliances demand. This is a buy and every day. So yeah, the Nifty Auto is screaming to buy, and the Nifty Realty is recovering. Nifty Financial Services is positive. You can hold or buy, and a Nifty Bank Nifty is also like it's positive by 0.97%. Nifty Bank is also like positive. You can hold, and Nifty FMGC you can also hold, which is kind of defensive with 0.73%. And Nifty IT, you should watch actually. Wait for the micron results with which is currently at 0.110%. And the Nifty Metal minus 0.97. For now, you should avoid and accumulated the support stocks like Vedanta and Hindalco. And the Nifty oil and gases, I think it's mixed, selective. You should wait for some time with currently at 0.36% minus. And Nifty Media, I think you should avoid this for some time and wait for a while. It's currently move of minus 0.06. So yeah, the very important here is market is closed tomorrow and Friday for Moharram. So today's session is the last trading session of this week. So which means whatever positions you take today and you are holding over a long weekend, Friday closed, but Saturday, Sunday, 3 days like micron results come tonight. So us USPC inflation data comes today evening. If either of those goes badly, if you like you can't sell tomorrow, so keep positions light going into close today. So don't over leverage. So yeah, let me just give you the theme of this week's market in one clear picture. India's domestic story is winning. Auto, realty, banking, FMCG. These are all sectors driven by domestic India.
Last year, yeah, last year, budget, either pocket. Yeah.
ಏನಿದೇನು ಲಕ್ಕರ್ ಇದೇನು ಎಕ್ಸ್ಟೆನ್ಷನ್ ಬಾಕ್ಸಾ ಏನಿದೆ ಆಗ್ತಿಲ್ಲ. So I was explaining and I was giving a clear picture about the whole week's market. India's domestic story is winning, which is auto, realty, banking, FMCG. These are the all sectors driven by domestic India. Domestic consumptions, domestic credit, domestic housing, they are all like green today. And global story is mixed. So IT, global tech spending fierce. Metals like global commodity price softens. Oil and gas geopolitical easing. The message is actually clear in times of global uncertainty. Best like bet on India, and India means like auto, housing, banking, consumer. These all are your portfolio like strategy for the next 6 to 12 months. So yeah, it's the long weekend, so just invest whole positions with pure certainty. So yeah, we'll be back with the updated news. And also, if we have any updated news in the market and we updated calls, So we'll be back, right back. Stay with us. So that's for the today's heat map and stocks which are outperforming and underperforming, and about the open interest. And I also told you the stocks of the day. You should keep an eye on these stocks which I mentioned. Yeah, that's it. Just keep your eye on some stocks which I mentioned. One is Indigo, RFC, Bandhan Bank, S Bank, Bajaj Auto. These are the some stocks you should keep your eye on for today. And which I already mentioned that some stock you should avoid for today and wait for the some latest and updated news. And yeah, thank you. We'll be back after some time.
So hi guys, we'll just discuss about the commodity markets. So we are into the second half of the market, and we saw that we had expected a bullish bias, which we discussed in the morning session itself. So, so the price has exactly reacted to our zone. We had drawn a zone over here, and the price exactly gave us around 322 points. We still stay in bullish because the price again reacted to this zone. But since it is expiry, we can expect some huge profit booking. And from past 2 days, price has been going up. So there must be a liquidity correction from the market, or there must be a liquidation. So we might expect the price to collect this opening price, or it's forming a level over here. So if we look at the price, if you look at the price, it had collected this level. So traders who have bought in this level would have liquidated. So price just collected this level and it's moving up. We can't validate this movement. We need a structure shift in 5 minutes. So price hasn't given a structure shift yet, right? So we need to wait for it. So once price closes below 77,600, then we can look for long positions. So we'll just talk about the commodity market within a few minutes. So until then, let me know if you have any stocks to analyze. Let me know what position you have bought in the stock. So when it comes to Nifty analysis, which we did in the morning session, you could see price. I told price has reacted to this zone, and I told you guys to wait to close above this if you are looking for a long positions. So price has exactly closed above this zone, and price reached this level which we used which we analyzed using option chain open interest. So we got to know that there was a strong resistance in 24 to 50. So price exactly reacted to this zone, and price is currently facing towards it's moving towards this price. So we need to wait for a 5 minutes candle to close below this zone, which we have drawn. So once it closes below this zone, we can look for we can expect price to uh, fall till this zone, and again it might move back. The bias is still bullish, so this we can consider this as a pullback. So okay, we'll just touch upon commodities. I'll just change to. So when we look at the screens right now, there's a massive multi-commodity meltdown happening across the board. So if you're only trading equities, you're missing where the real structure smart money is moving today. The entire commodity ecosystem from safe haven bullion to liquid gold energy is bleeding red for second consecutive session. So why is this happening is because it all comes down to Switzerland. We are currently on day 4 of the high stakes US Iran peace negotiations. The market is pricing in absolute optimism that the definite deal will be finalized. So the moment you eliminate the war risk premium from West Asia, the safe haven trade completely unravels. So we also have the BSE Sensex weekly option expiry overlapping right now in this 2:15 p.m. to 3:15 p.m. window. So this is creating a major swings in USD INR currency pairs, which is directly impacting domestic MCX conversion spreads. So if we dive straight into the raw data and unpack the exact levels, we'll get to know the game plan. So if we look at the crude oil crashing, we'll just shift the crude oil futures. So yeah, let's start with the absolute epicenter of today's volatility, crude oil. If you have been shorting crude since last week, you're making absolute bank. Global Brent crude, which dropped straight to pre-war levels, slipping all the way down to $72 per barrel. So MCX crude oil futures, which is trading down heavily at 6,682 per barrel, registering a massive intraday drop of minus 4.5%, which is down by 282 points. Open interest has surged by 12.52%, indicating a massive aggressive short building by institutional desks. So if you look at the microstructural breakdown, look at the technical chart of MCX crude. We are completely shattered the 6851 structural floor that held up yesterday. So the market was formed an unrelenting sequence of low rise and low lows. So why it is collapsing? Tanker and shipping traffic through the critical Strait of Hormuz is normalizing rapidly. Tankers are moving freely as the risk premiums vanish. Combined with the EIA data showing the OPEC global market share could shrink without the UAE. So supply fears have completely turned into demand worries. So if the Swiss negotiates a confirmed signed deal within the next few hours, this corrective slide will accelerate. We are targeting 6,600 on the downside, and do not attempt to catch a falling knife here. Any pullbacks towards 6,780 to 6,820 should be treated as a sell-on rally opportunity, keeping a strict stop loss just above 6,850. So when we look at the gold and silver, before that we'll just touch upon the technical chart as well. So if we look at the technical chart, we could see that there's been a trend line retest over here. So we could see there was a demand zone formed and it recently broke. So this gives us a strong structure break also we have got here, right? So the price will definitely go till this resistance level which is formed here, say support level. So this is the technicals of crude oil. So you might expect price to the price is rejecting this level as well. So we got a shorter time frame demand over here, and price has retested. So there's a high probability of price to go till this level. So this is the technical of crude. So keep eye on it. We can expect around 75 points. If price break this level, then we can expect around next resistance level or a trend line. So just have a target of 65 points, 120 and 200 points. So when it comes to gold, yeah. So when we come to gold, I'll just touch upon gold as well. So currently hovering under intense pressure, which is down roughly by minus 0.87% at 1047,550 per 10 grams for the mini contract. So yesterday gold closed at 1,44,352. The broader multi-day trend remains heavily capped underneath the major 1,45,500 resistance zone. As long as the US dollar index stays resilient, domestic gold cannot find a bottom. So when it comes to silver, it is getting completely obliterated today, down an astonishing minus 5.99%, crashing by 13,534 to trade at 2,12,300 per kilogram. So this is why we call silver the high beta monster. When it turns, it doesn't walk, it runs. So it has broken clean below the 2,23,050 support level. So why are gold and silver getting slammed together is billion thrives on chaos, inflation, and war. So with the deflationary drop in crude oil prices and impending geopolitical resolution, funds are aggressively dumping their paper gold and silver long positions to allocate capital back into risk assets and equity. So we'll just look at the technicals in the gold so that we'll have a clear picture on structures. So So we can look at the gold is in clear downtrend. So let the price expect price to go till this area. We have a strong resistance level as well here. So price has reacted to this support. So don't think that the price is going to turn uptrend. The technical shows the price is in downtrend. So you need to wait for a structure shift if it's gonna happen. So we have a strong resistance level, and if we look at the 15 minutes chart, we have a demand here, but just expect a price to clear this level, or there's high chances of price reacting to this level. If we refine the zone, we have a strong level. This area acts as a liquidity here. So let the price clear this level, and we'll get a reaction, strong reaction in this zone, as even our trend line is passing here. So you can look for short positions once you get a strong bullish, bearish candlestick patterns. So we'll just look at the base metals and natural gas quick scans. So let's quickly scan the industrial base metals and natural gas for our afternoon momentum scalpers. Natural gas trading steady near 306.20 per 306 rupees of roughly plus 0.99%, while oil is crashing. So natural gas is holding its ground beautifully around its cost pivot of 305. So copper and zinc, copper is trading soft near the 1280 per kg mark, while zinc is floating around 353.8 per kg. So both industrial metals are tracking a cautious global demand outlook. Look to sell copper on any minor intraday spikes towards rupees 1305. So to wrap it all up, the macro theme today is uniform geopolitical de-escalations. The smart money is heavily shorting energy and unwinding safe haven billion. So, but let me give you a massive warning. This is binary headline-driven market right now. If negotiation is Switzerland suddenly break through or hit a roadblock, this entire matrix will completely flip upside down in a matter of seconds. So crude will violently squeeze back to 7,150 and gold will rocket straight past the 1,46,600. So manage your position sizes carefully and never trade without a hard stop loss today. So if you want me to pull up the 5 minute candlestick chart to find an entry or type silver or crude if you want to look at any intraday oversold bounce levels, let's break it down together. So let me know in the chat. So as we discussed, we'll just switch the chart to the index itself. We are told that the price might reach the opening level. The price might come down to this opening level, and because today we got to know that today is a Sensex expiry. Uh, it's Thursday, right? So we know Sensex expiry. So price will definitely come to opening level. So then you can see a strong rejection from here as we have yeah, yeah, as we have a breaker block here. It's a strong support. It will look for a rejection level. So once you get a rejection, then you can confirm it that you have a bullish sign. Don't blindly buy this level. Wait for the rejection or a bullish candlestick patterns. So guys, hope you had a great time watching live. So we'll be back again tomorrow. Tomorrow is a market holiday, so we'll be back again on Monday. So until then, stay tuned. Like, share, subscribe our YouTube channel. So thank you guys.